Welcome to RenMac Off Script, where we discuss markets, economics, policy, history, and life. The 26th of July, 2024. I'm Jeff DeGraff.
I'm Neil Dutta.
And I'm Steve Pavlik.
As a reminder, all the charts that we reference are posted to our Twitter account at RenMac LLC and our LinkedIn page. Well, the big news out of the Olympics today, I read in the Wall Street Journal that swimmers pee in the pool. Did you see that?
There's like some train or rail strike.
Well, there's that, but I mean, that's not the big news. The big news is, these guys actually use the pool. That's crazy.
Well, I get to talk about Kamala because she's also Indian.
Yeah, maybe we can defer to you.
Yeah, we'll give you the.
I mean, she's Indian when she wants to raise money. She's black when she's campaigning.
When she wants to get votes.
Yeah.
Well, I've been known to identify as female during a Halloween party, so maybe I can hit on part of that too.
I mean, no, her mother was Indian.
No, I know that. Right. Yes, absolutely.
I just love how, so everyone in a lot of the, people in my generation in the South Asian community refer to Kamala as Auntie Kamala. And, Indians in my generation, Indian Americans, we basically call anybody that's older than us, that's a woman, Auntie. Like if it's your friend's mother, whatever, even though you're not related. And same with men, we call them uncle. Traditionally, and so
is it endearing or is it pejorative?
No, endearing, like as a sign of respect, right? And so you have a lot of these geriatric millennials, people like me, referring to Kamala as Auntie. And I think what's funny about that is and they'll be like, Auntie is we have to vote for Auntie. She's and I was like, well, actually the real Auntie has already come out and she told us she's all in with Trump.
Right.
Because Nikki's the real Indian. You know what I mean?
Well, JD Vance's wife is too.
Kamala's Indian when she's raising money in Silicon Valley. Or I don't know, at Kaiser Permanente, like some big healthcare company. It's either tech when she's doing fundraisers for tech, doctors, or 7-Elevens, maybe the TLC commission too. She's Indian. Every other time when she's out there campaigning, she's black. Just so we're clear.
Well, it's nice to have the optionality.
Right, yeah.
I mean, come on. You don't want to go right down the middle. All right, we're going to get this started with you, Steve, talking about Kamala. Now we all have to know how to officially pronounce her name.
No, let's just start from the beginning. I don't even know. Like, did we start the actual thing?
We did. We're good. Let's keep going. Here we go. It's the dog days of summer. What do you expect? It can't be all formality all the time. So we've got Harris as the pick. How big a deal is it that it didn't go to, a more broad, more democratic process? Or is that not that big a deal? I guess it depends on who you ask. Is it really just the Democrats saying, let's just get united? I mean, there hasn't been any dissent, right? I mean, we're not talking about people raising their hands, at least in a meaningful enough way to make a lot of noise to say, hey, what about me over here? And is that a function of, hey, shut up, you'll get your chance in 2028? Or is it self-induced where they say, I don't want to run into this. This is a mess. This is a complete mess. I don't want to be part of the chaos. And I'd rather, be able to plan this out for the next 3 years to run effectively in 2028. What do you think, Steve?
I think it's a combination of factors. I mean, you can argue that Biden's decision was maybe the right one just for Democrats at the wrong time, which sort of left them in this hole where they don't have a lot of time to climb out. I think from that perspective, there's a desire from the party to make it more of a selection rather than an election to get behind Harris. And if you're somebody who maybe thought about challenging her, she had a lot of advantages in the fact that Biden was going to endorse her. She could inherit the campaign cash. And to your point, there's a really much upside to trying to challenge her in a primary that's sort of already, say, rigged, but definitely stacked in her favor, given the delegates are Biden nominees, and she's one of the members of the ticket. I don't know that there are. If you're going to try to attack her competency, do you really want to offend Black women, who's such an important Democratic constituency base, if you want to run in 2028? And just given the late stage and sort of the chaotic circumstances that would occur, if you try to go after her and you lose the primary and she goes on to lose the election, which we can maybe talk about the polls, there's a decent likelihood that she will, then you're going to get blamed for weakening the candidate, and that kills your 2028 prospects. Whereas I think if you were trying to run as more of an objective person, look, let's go ahead, wait till 2028. If Trump wins, there could be a bigger appetite for a Democrat after that. Maybe that would be your better political move. So I
Right.
think at this point, that's why you see more of the focus in terms of the jockeying on the sweepstakes. Who is Harris going to select as their VP? I think there's less political downside risk there. If they go on to ticket loses, you won't be blamed for that. It's sort of, I think, the Democrat equivalent to Paul Ryan and Mitt Romney from 2012. Ryan was sort of seen as a good quote unquote party soldier, was on the ticket, eventually became Speaker of the House. Parties shifted since then. But again, I think that's when you talk about potential VPs for Harris, where maybe the political calculus is.
So what is that looking like, the VPs for Harris, and how important is that at this stage?
Well, in terms of the VP, we've talked about before, some of the same rules apply when we talked about Trump's selection. The first order of business is, you want somebody that can fulfill the role theoretically in the event something happens to you. That's sort of the do no harm. And then I think you look at the electoral map. That's where I think Democrats may be in a more advantageous position than Trump was, as you sort of look at the battleground states. There are people that Harris can presumably select from that may be even able to deliver some of those states. And to your point, I think that's where you start looking at, least according to the betting markets. Senator Mark Kelly from Arizona seems to be the one in the lead, at least according to Predicted, followed by Pennsylvania Governor Josh Shapiro. And right now, I think that's probably the one of those two, at least according to the betting markets. And a lot of the chatter here within DC seem to be the front runners. I know Roy Cooper has been mentioned from North Carolina. I believe he's a little older than Harris. I'm not even sure if he would be able to deliver North Carolina. But the map has gotten better with Harris at the top of the ticket for Democrats. I mean, you had reports where New Jersey was going to be in play under Biden, just the direction everything headed at that point after that disastrous debate performance. That's no longer the case. I mean, she's with Harris and sort of appealing to this base of voters. She shored up those states and maybe even put states that were trending away from Biden, like Georgia, North Carolina. Maybe they're a little more competitive now. But you look at sort of what's going on there with the polling. You have Democrats very excited now in an over response rate. That was the opposite of what was happening with Biden, where they were depressed and they weren't responding. So that can skew some of the results. I mean, objectively, the polls have gotten a little bit better in terms of the direction of Harris, but Trump's still ahead in most of the battleground states. So it's been very marginal at this point. It's also a lot of different events going on right now. So it's really difficult to really get a sense of where the polling really is between the assassination, the RNC, Biden dropping out. Harris is going to announce her VP pick presumably next week. So it may take a few weeks to try to digest this. I guess where I sort of see things is Harris, and you're seeing this reflected in the polls, appealing more towards younger voters and voters of color. That's important. I think what sort of left unsaid, or at least at this point unknown, when getting some of the polling data, it seems to be trending in this direction, is she has softer support than Biden amongst older white voters and white working class voters. So think about a political seesaw. Yeah, this might be helping you with some groups, but it may be coming at the expense of others. And when you talk about the blue wall, there's a pretty important group there that benefited Biden in 2020.
Yeah. Well, and we've got a good GDP print this week. Spending was up, investment was up. What does that do to the Fed, Neil, in your estimation? Is September still the likely course, or does that push it out any?
No, I think that September is still the most likely outcome. I think that they'll use the July meeting to basically tee up cuts over the remainder of the year. If I had to say one thing different relative to where the consensus may be, I think there's a stronger chance that they actually go 3 this year. I don't think that's much of a leap, considering the market's more or less priced for 3 by January. So all I'm saying is they pull one of those cuts forward. But I think they go in September. I think what's going on right now with respect to the election makes it frankly more likely that they can cut. It's sort of in the fog of war. It's going to be, we're going to be questioning election results, legal battles. Oh, and in other news, the Federal Reserve cut interest rates for the second time. So that the path dependency argument, I think, really falls apart the moment the Fed eases. I mean, I was getting that question quite a bit, not that long ago, where, well, if they don't go in July, they can't go in September because of the election. And if they can't go in September, that means the earliest they could go is December. That was a a talking point that I was getting quite often in meetings not very long ago. And I think now that, who is the Fed even helping at this point if they were to wait and go in September? I mean, it's not even immediately clear to me. But I think more importantly, the fact that this is being telegraphed and we're going to be in the fog of war, so to speak, followed right after the election. I think the Fed could easily sneak a cut in right after election day, especially because, who knows, the markets may well be priced for it because the inflation data will continue to improve. And I think that's important. The inflation data this morning came in, sort of right on the nose, 0.2% month over month. But I think what's important is that, we've seen improvement over the last couple of months. And, it stands to reason that will continue. Obviously, there's a lot of, inertia behind inflation, and whatever inflation is today represents whatever policy was yesterday. So I think it just makes sense from first principles to assume that inflation continues to slow. We're also getting corroborating evidence from, wholesale auction prices for cars. That continues to deflate. Rental inflation continues to moderate. If we look at corporate earnings, we have the so-called fast food wars, right? We have Chipotle telling us they're not raising price. We have consumer packaged goods companies telling us they're focusing more on volumes over pricing, right? These are kind of tells on the trajectory, I think, of inflation, and all the while, unit labor costs are running weak. So where's the inflation really coming from at this point? So I think just waiting for waiting's sake doesn't make a whole lot of sense. And the last thing I'd say is just on the GDP data. Yes, GDP was stronger than expected, but I don't think it should be used as a sign that the economy is reaccelerating or that growth is getting away from the Fed. I think you should look at it more as a reminder that growth isn't falling apart, and the Fed can be a little patient. When I look at the data, I see a meaningful contribution to consumer spending from healthcare spending, which isn't particularly cyclically sensitive. I see relatively soft income growth net of transfers in real terms. And I see a savings rate that's been coming down. So, I think that there's some risk that pace of consumption that we saw in the second quarter won't last. And because we saw such a large inventory contribution to GDP growth in Q2, because consumption is likely to moderate, there's some risk that inventory boost doesn't last in the second half of the year. And we also saw a very strong pickup in equipment spending in real terms, but that wasn't really corroborated by things like non-defense capital goods shipments and other areas like business investment type indicators like regional PMI, capital spending intentions, and so forth. So I'm a little bit, it's hard to reconcile that with some of the other data that I'm seeing. So we'll keep an eye on it. But I do think that there's more reason to think that the trend is a lot slower than what we saw in Q2, probably closer to 2% than 3%.
Is that data driven at all by AI components, chips, racks, servers, yada, 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 yada? Does it break it down that much, or is that?
Well, I think the big increase, I mean, I have to double check, but I think the most of the increase in equipment spending in the second quarter was in transportation equipment. So that wouldn't really be, I don't think, considered AI related.
Right.
We have seen things like
not the way I drive.
Data center, like non-residential manufacturing structures has been quite strong, and a lot of economic watchers kind of attribute that to the CHIPS Act and basically this reshoring effect. But overall structure spending investment was actually down. So it's true that non-residential manufacturing structures were up, but commercial real estate construction more broadly wasn't.
Well, we have seen the first oversold condition for semiconductors internally. It's actually not happened for NVIDIA yet, but internally, the first oversold condition that we've seen since April of this year. And that follows on obviously the extremes in sentiment that we've been talking about really since June. So that is lingering out there. I think probably more important in terms of lining up with your call, Neil, is what we're seeing from short rates. We're about to get a dark cross in rates. In other words, the 50-day crossing below the 200-day moving average on the 2-year yield. And we use that because that tends to be a better predictor of where Fed funds is going to end up. So obviously, the bond market, incorporates all those expectations, and you start seeing that. Probably most interesting, though, on a very short-term basis, on a 1-month basis, historically over the last 25 years, after you get a dark cross in those short rates, 12 out of 14 times, that's 86% of the time, the market is higher 1 month out, and it's a pretty decent skew to that as well. So keep that in mind. The market overall is not oversold. We've seen most of the weakness here really concentrated in those mega cap names. The NDX, the NASDAQ 100 is oversold, both on a cap weighted and equal weighted basis. The S&P is not yet oversold, though it is close. I think probably most interesting and refreshing is that the equal weight S&P is not even close to being oversold. It's right back to neutral. So in other words, what we're seeing, this weakness is concentrated at the top. A lot of those names that really helped drive equity performance for the first half have come off, but it has not impacted adversely a lot of the other names that are out there. And so it looks more like a consolidation. The reason that is important is because we had 66% of the Russell 3000 make a 20-day high back a week ago. That was only the 4th time in the history of the Russell that has happened. And historically, that has been a very bullish precursor to forward returns. So, having that happen and then all of a sudden having a bunch of weakness in the market would have this kind of climactic gasp feel to it. That's really not what's happening. It really, if anything, underscores the importance of that breadth, because 66% of the names, obviously it's a big number, about 2,000, were in fact driving the market higher. And so, getting that weakness at the top is not the end of the world. The other shift that we made was to our asset allocation model. This is a quant model that we use where we went from 12% bonds to 46% bonds. Obviously, clients can see where we reallocated from those dollars to lengthen our duration. But that's really the call. It's about lengthening the duration, and it's not a bearish call. It's not a bearish call because what we're seeing out of credit is still this continued, almost relentless push to contracting these credit spreads. That's not going to happen if, in fact, the market is anticipating a recession. So if the 2-year yield is down, you have to make a decision. Is the 2-year yield down because we're going into recession, or is it down to normalize and take real rates down? And we use credit to help us make that determination. And the credit markets are still in very, very good shape. We've got a bunch of oversold conditions, which I'll get to, but let's talk about next week. Neil, what's on the docket next week?
Well, we have the Fed meeting. I think it's interesting you mentioned sort of the corporate credit markets, and I think it's an interesting debate about financial conditions, like how loose are financial conditions really? Because we do have this sort of pushback. I mean, how can the Fed cut with rates, stock prices at all-time highs and corporate credit spreads at tights and so forth? And I think that kind of misses the point. The Fed has eased with stocks at record highs before. That's within the historical record. I mean, they did it in 95. I think they did it in 2019 as well, if I'm not mistaken. But I think it's an open question about how useful these financial conditions indicators are, or rather how loose financial conditions are if the unemployment rate is rising, if core inflation is slowing, if bank loan growth is so sluggish. How loose are financial conditions really? So maybe there's more to it than just equity prices. Maybe it depends on whose equity prices, right? So equity cost of financing has maybe gone down for, NVIDIA, but, for a small cap industrial name, maybe not so much. So I think it's worth kind of thinking about that a little bit. But the main event next week is going to be the Fed. And then we get data on employment at the end of the week. Right now, the market is looking for 175,000 on non-farm payrolls, with the unemployment rate at 4.1%. That would be flat relative to the prior month. Now, obviously, unemployment has been going up 0.1% in each of the last 3 months. We have to keep a close eye on it. I mean, if the number comes in at 4.2, we'll see. I mean, continuing claims have slowly been leaking higher. So I think the risk to the consensus with respect to the unemployment rate might be a little bit higher. And we also get the ISM manufacturing PMI. I know that's important for a lot of investors. And we're just, markets, again, not looking for much, still another sub 50 print. And that's really it. I mean, keep an eye on auto sales. We had a really weak auto sales number in June because of a cyber hack. And so the idea is that now that dealers have their, technology infrastructure back online, they could probably process more transactions or what have you. And, we should see some payback. So I'd look for somewhat firmer auto sales over the month.
Yeah. And Steve, what do we have from Washington next week?
Well, you spoke about lengthening duration. Interestingly, the Democratic National Committee is looking to shorten duration because they gave Tuesday deadline for any challengers for the Democratic to Kamala Harris to either get in or remain out. We talk about why that's likely to most of them to remain out, and that's important because I think after that you're probably going to hear Harris announce her VP, talk about who that might be. Because as early as Thursday, Democrats are going to look to have the virtual roll call. Will actually formally nominate Harris. Publicly, the reason for that is to get ahead of an Ohio ballot deadline, I believe August 7th. So that's sort of the window of opportunity between the 1st and the 7th for Democrats to do that. Because again, the stated reasons to avoid a potential legal challenge in Ohio, I think the political reason is they want to ensure that Harris has the nomination. There's no potential risk of some delegate fight or that can of worms opening in Chicago when their convention starts at August 19th. Outside of that, the House has already adjourned for the August recess period. They won't be back till September. Senate's in briefly. I believe they're going to pass the Kids Online Safety Act Tuesday. Could impact some people in big tech. I think the big takeaway, though, is the fact that this is the only bill moving forward with big tech. There have been a lot of other bills that have been talked about, whether it's the liability shield and others that aren't moving. So my guess is this is enough for lawmakers, has bipartisan support, to sort of pat themselves on the back, say we did something here to address big tech, but I think more about what wasn't done. Again, a win for the big tech industry.
Yeah, well, we'll be watching these oversold conditions. So let's list off some of the most important oversold conditions. Semiconductors oversold, copper oversold, silver oversold, Taiwan oversold in a strong uptrend. The Nikkei oversold as we get this big overbought condition in yen. We are sellers of yen on that overbought condition. And then obviously the NDX oversold here as well. All those I mentioned are in uptrends. And so, oversold conditions in uptrends should hold. If we're in a presidential seasonal cycle, then the market should be strong through basically the 7th of September. I know that's very specific, so let's call it the majority of August. If we are in a traditional seasonal cycle, not a presidential cycle, then we should be kind of drifting. Still okay for August and then weaker in September. So we'll continue to keep an eye on how that's acting. But the oversold condition, I think, at least tactically right now, is good for several days, if not even a couple weeks. And then, one of the things that really jumps out to us is biotech. Biotech continues to strengthen. It broke out weeks, if not months ago, changed trends at least months ago, and then broke out again, but still looks good to us. S&P 50-day moving average was violated yesterday, which is essentially 54.35, but we're back through it already on Friday. So, really kind of chalk that up as a victory for the market, holding that support level. Is it long-term support? 5,200 is really kind of that number that is more critical support, with now resistance back up to the old highs. Again, still in trend, back up to the old highs of 56.70 on the S&P. 10-year yield below 420 puts 403 in play with 450 as resistance. And Bitcoin still holding in there. I continue to believe this is going to be an important proxy for risk assets between now and the end of the year, maybe even further than that, as long as it holds support. 59,755 is support, 72,800 is resistance. Well, join us again next week. We'll be 1 week older, 1 week wiser. Don't forget to follow us on Twitter and LinkedIn. And if you want some deeper insights, join us at renmacaccess.com. Until then, I'm Jeff DeGraff.
I'm Neil Dutta.
And I'm Steve Powell.
We'll see you.